What is going on, traders, friends, investors? We are back in another video. Starting a new series, ThinkorSwim Gems. I love this software. It's really powerful. There's lots of cool stuffs. But you know how we like to do it, short and sweet around here, so we're just going to have to make a series out of this because I don't want to bore you guys with like a 30-minute video. So, I thought the best way to kind of make this pertinent and relevant is we are going to go into the ThinkorSwim time machine and we are going to see some live candle action. We get to see how these things materialize minute by minute and kind of what that means moving into the next trading session. And then, of course, how to apply it to chart an exit or entry point. Now, I am not a financial advisor. This is not financial advice, but I am an electrical engineer. Now, before I go on, I want to make it clear that there is no end-all, be-all, anything. No indicator, SMA line, no nothing is going to make or break your account. It is about using all of these things together along with general market sentiment and other outside catalysts to formulate your decision on how you're going to play the scenario at hand. You know, easier said than done, but that's part of the process. So you know the drill. Questions, comments in the down there, timestamps in the down there, bagholder therapy down there. We're going to be talking about trend candles. This is the style of candle I like to use. It tells you a lot about the sentiment second by second before the actual final symbol is posted on that trading session, or that trading minute rather. So hopefully this makes sense. It's a little bit confusing at first. Alright, so let's go over the different candle types. Gotta find them. Alright, here we go. So we gotta fill up. This candle basically means the sellers were in full control. We opened here and we closed here. This is the opposite. The sellers are in full control. The trading session opened at this price and it closed at this price. Now let's talk about candles with wicks. This is where all the juice is. So for instance, the next candle, you have this long wick right here. The body of the candle always shows the open and close of the trading price. Or is this would be the open and the close of the trading price, inversely or conversely. So what this candle basically tells you is we opened here, we were trying to close here. The price, the max price of that minute trading session got all the way up to here, but we were already kind of selling off right here, so we have a lot more the sell pressure continue on into this candle, and the sell pressure pushed the top of this sell, the top of this candle, all the way down here. So we opened here and closed here when we were trying to close up here, but all the sales pushed us down. Or the opposite over here, you see, you know, the buyers have lost control at this point because it's a red candle, but you can see there's a lot of resistance still from the buyers. The buyers are trying to push this price up and is making it wick. And it continues onto this candle, but you see at this point we're still red, but now it's shifted. Now the buyers are in full control and they're pushing this price down. Power struggle, because you see wicking from both sides. So now that you have a little crash course in candles and wicks, we can move into some live action. Alright, no cheating. We gotta turn off all the stuff. This is going to be a combo video though. It's hard to not mention trend lines if we're going to be mentioning candles. So unfortunately, Hyliion's doing this weird thing that because the ticker changed, it's not loading on demand. So we're going to start here so we can see these candles forming live and kind of drive that point home. And then we'll circle back to Hyliion and kind of use the candles that are already there and chart some resistance points. And then we'll see how we can use that to get an idea of when it might be a good time to take profits, or maybe an idea of when it's about to run from us. So you see there's a power struggle right here. Got a lot of sell pressure, got a lot of buy pressure. And see this candle, see sellers are pushing it down. Oh, buyers are getting control. Sellers. So there's like a struggle right here. Like this is kind of dicey, a little sketchy right now. No one's winning. Let's fast forward a little bit. So what does this tell us? Well, this thing is having a really hard time breaking out of the zone right here. You saw we didn't have a lot of resistance in here, but also market is open now, so there's going to be a lot more trading going on, so the price action is going to jump a lot more. Oh, starting to run. Here's where the run started. So we'll put a line like right about there. And then the top of the run. Extend those guys to the right. Okay. Wow. So we're in the danger zone right now, and you see right here this candle, there's a lot of buy pressure trying to push this thing up. A lot of sell pressure rather right there. So we kind of get back into that same level. Nice little fill up, but then you see all of this sell pressure. So we got to this point, a lot of sell pressure, and then we got to even slightly lower the peak kind of that second little jump there, and it touched and turned again. So like this thing's heading down now. All right, now what you've been waiting for. Look, here's the proof. It just goes buffering forever. I hate it. Anyway, so no on demand today, but you can still learn a lot from this. So going back to what we talked about, wicking is a sign of rejection. It is a sign of downwards or upward pressure, buying or selling pressure during the trading session, during that trading minute. Now, how can we use this to make money or protect ourselves from losses? And that's why I said we're going to have to include some different stuff and things here. So this is going to be a compound video. We're going to do some trend lines also. So here's a peak from a couple days before. Extend to the right. I don't really like my trend lines red. Make it a fat boy. Alright, so then over here, put this one. So here's the top of our run, and here's where it starts to break away from us a couple days later, like 2 days later, when it actually really drops very, very low. So the bottom of a run or the top of a run is a good place to put a resistance level, and just also where you see these rejection bands, right? You see the wicking happening. You know, this was a sell candle, it filled down, but there's a lot of buyers trying to stop this, and you see the further power struggle there because the wicking on the top and bottom. And then you move over here into the after hours, and once it breaks that point where it had all that buying support, it runs from us. So if you had some spare change or you were liquid at this point, you could have been like, hello, like it's gonna run, and it runs, and you can jump back in. Likewise, if you're a bag holder for the next couple days and this thing runs up, here would have been your first red flag that, well, if this is 4 in the morning, you would have never been able to touch this. But over here, this day, you would have been able to play this 7:30. It touched and turned right here. It had a lot of sell pressure down. So you would have been like, okay, maybe I want to jump out right now because it's going to sell off. Does a little bit, and it keeps testing this level, man, and then it just runs. So there's a lot to be said about charting trend lines and looking, where is this resistance? Where is the sale being rejected? Where is the buy being rejected? Again, not the end all be all, but it's a great reference point, and I mean, they're fucking right a lot of the time, man. So I encourage you to try to add this into your toolbox of analysis. I hope you found this useful. I'm going to try to crank out another video today on our plan moving forward. But realistically, I'm just looking at the news wires, trying to hear anything about the president. That is going to dictate October. Anyways, hope you enjoyed. Catch you in the next one.